Hi, and welcome to the Jeff and Chris Show. I'm your host, Chris John.
And I'm your host, Jeff Garman. Today we are continuing our series on Are You Ready to Buy a Home?
Today we are going to explain the difference between getting pre-qualified versus getting pre-approved.
That's right. And I can't tell you, Chris, how many times I get asked this question, and there really is a big difference between the two.
That's so true. And really no one tells buyers what they really mean and how much each of them are perceived when you're writing an offer or when exactly you should actually get this done.
Well, I can tell you this, you should get either pre-qualified or pre-approved as soon as possible. I might even recommend doing it before you even start looking for a home, as this information is important in determining your purchase price and if your price range is realistic for what you are looking for. So let's go over exactly what they are.
So, pre-qualification is the process by which you, the buyer, provide a mortgage lender your personal information, such as your contact information, your employment history, assets, liabilities, and your annual income, and you allow the lender to run credit report to determine your credit score. Now, using all this information, the lender can tell you based on that, with the information you provided, what the maximum loan amount you qualify for using the programs currently available.
So pre-qualification is a great place to start, but the only problem is that the mortgage lender has not verified any of the information. They have reviewed the actual documents to verify that the information that the buyer has provided is accurate, nor have they ran the information through an automated underwriting system. So we would actually recommend
getting pre-approved. When you get a true pre-approval, you will provide the lender your actual documents so they can verify the information is true and accurate.
Such documents as the last 2 years' W-2s, 1 month's recent pay stubs, the last 2 months' bank statements, or even the last 2 years' tax returns, just to name a few.
And once the lender has taken that information and verified it, they will run your information through a loan scenario through an automated underwriting system to determine that you are eligible for a loan.
And in many cases, your file even goes through the actual underwriting process, where an actual human underwriter reviews your file, and you receive a conditional approval for your loan amount, with the only remaining conditions being an acceptable appraised value, a final lot confirmation, or an acceptable title.
And in the eyes of sellers and listing real estate agents, this is really what they are looking for. A pre-approval letter from the lender stating that they have verified your information.
Exactly. And let's put it in terms that buyers can understand. Assume you were selling a home for $200,000 and 2 buyers made offers on your home. One has been pre-qualified and one has been pre-approved. Which would you likely accept based on the previous information, Chris?
I don't know about you, Jeff, but I am pretty sure that I would take the offer from the buyer that has actually been pre-approved.
Sure, exactly, and that is why we highly recommend that buyers should get pre-approved. If you need to find out information on how to go about getting pre-approved, simply click on the link below the video or at the end of the video, or visit our website at www.thejeffandchrisshow.com.
Hey, thanks for joining us for this segment of Are You Ready to Buy a Home? And be on the lookout for our next class.
See you next time.